Don't tell me that you haven't been warned. What's currently happening on the market was foreseeable. The interest rates are the pulse of the financial system. It's really important what the Fed is doing. The market just thought, oh my gosh, if this all is happening, then the valuations of the stocks and crypto and everything is way too high. So that's why we saw this unbelievable crash. Is this the bottom? Welcome to this very important video on a Saturday. Now, this is like an emergency video because some of you are totally out of space and they don't know even what's going on, okay? So what's currently happening on the market was foreseeable, okay? Don't tell me that you haven't been warned. I said this many times on this channel, and I will show you in a second a clip of one of my old video on the 28th of December where I exactly said what is happening. Were you warned? Absolutely. Is it easy to act? Absolutely not. See, the stock market is always a forward-looking tool, a forward-looking instrument where many wheels are turning. Okay, and just because we know when interest rates raise that this is not good for the stock market, or not that good anymore for the stock market like it was before, that's pretty much clear for everyone who's, have anything to do with investments. But you never know the time when things are going to be not so great anymore, right? So it happened like 2 weeks ago, I think, with the issuance of the minutes of meeting of the Fed, where they were much more hawkish, much more, let's say, bearish on the outlook, and therefore much more willing to increase the rates much more than actually they said in the press conference after the last meeting. So that's why Wednesday will be super important, because this is the first time the Fed... Is this the margin call? Okay, it was not the margin call. So let's have a look into the markets, because the markets are quite ridiculously currently, specifically with those stocks that were highly pushed into crazy valuations like Peloton or Netflix and so on. And with just a little bit of, let's say, sourness of slowing growth, plus the overall black clouds of the Fed, they are losing much of steam. Okay, so here we have it. Python is, or was down 25% just on Thursday. Then we had Netflix after the earnings, right? We're down 20%, 22%. And then you have all the other big ones. For example, Tesla, from the all-time highs, we are away about 22%. Let's have a look into other stocks like Apple, for example. Apple is down 10%, almost 11%. Amazon also had yesterday a very bad day with minus 6% from all-time highs. About also 23%. This is big, guys, okay? Because think about it. If we are going 2 years back and going, for example, to the crisis of March 2020, which is here, you can see that, no, was not the case. But this is, for example, this is another great example. 2018, the Amazon stock with the Fed raising or wanted to raise rates, and they saw, okay, we cannot do this, lost about 30%. Okay, in the March of 2020, we lost about 16%. Okay, so somewhere between 16 and 30 should be the, let's say, bottom for this correction, in my personal opinion. Okay, but let's have a look what I said and warned on the 28th of December. For the next year, there is some difficult times, though. I don't want to say that, a crash is coming, but there is a couple of different kind of measures that, traditional finance teach us and are proven over centuries that something like that is happening. So what I mean, we have all-time high valuations for many stocks out there, okay? Specifically growth stocks of the last couple of years were absolutely balling, okay? And you had like zero interest rate. Now the Fed, because the inflation went so high, and obviously with inflation going high, all the anti-inflationary trades like Bitcoin, crypto doing very well as well. The Fed actually is now conquering the end of this huge spike in inflation by rising rates. And with rising rates, the discounted cash flow models of many growth stocks or companies that make future revenue is going down because, the money is just getting more expensive, right? So every 1% that the Fed is rising will result ultimately in a 10% decline of a kind of correction for this kind of companies. And this was just one example of many videos where I said, the interest rates are the pulse of the financial system. Doesn't matter if crypto, doesn't matter if stocks, it doesn't matter if, bonds, whatever, wherever. It's really, really important what the Fed is doing. So let's summarize it. I believe that we are going into something very, very, very difficult in the market. Is this the bottom? It's definitely feeling like it's bottoming out somewhere. And I will tell you now exactly why the Wednesday will be the day that everybody will either fear or very much look forward to or look happily back to. All right, let's go. So on Wednesday is the meeting day of the Fed. Okay, the Fed is meeting almost every month. Now after this meeting, there will be another meeting in March, 25th and 26th of January. So this Tuesday and Wednesday, specifically Wednesday after the meeting at around 2 p.m., they are coming out with a statement. And then after, I think at 2:30, they are coming out with the press conference. This will be a very important meeting and basically statement that will be issued on Wednesday at 2 p.m. I have no idea how the market will react towards the meeting. Usually on statistics, the market goes a little bit higher towards the meeting. This case, after such a sell-off and so much uncertainty, there is, let's say, very less to say where the market really goes, okay? However, I believe that there will be two scenarios happening. One is very high probable, which is the following. The Fed will come a little bit back, okay? Because think about it. There was so many different kind of concepts already thrown into the financial markets, and the financial markets obviously is pricing these things in. So there was a 4 times hike this year, 4 times hike next year, reducing the balance sheet, QT, and even a 50 points instead of a 25 points, so a double of increasing the interest rates already in the first hike, which is March. So this came, from all of the sides, came this information, and the market just thought, oh my gosh, if this all is happening, then, the valuations of the stocks and crypto and everything is way too high. So that's why we saw this unbelievable crash or correction. Now, while this is happening, China, for example, did the other thing. They reduced rates, lending rates, to, emphasize a little bit the economy. So the Fed is now on the very, 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 very thin line of, are we doing now too much? Or are we saying too much? So let's wind a little bit back and say, guys, we are raising the rates, maybe just 3 times this year, or maybe 3 to 4 times. We will decide a little bit later on. And then we also will do the tapering, but we don't know when. Okay, so not this year, maybe we don't know. We don't decide. If they just come a little bit down in their statements, this would help the market to make a small relief rally, not a sustainable and back to the heights crazy rally, just a relief rally. Okay. Then on the second part, there is the unbelievable, crazy concept where I think it's a small percentage of probability that the Fed stays very hawkish, bearish, for the market's bearish, which say, no, we will rate hikes, we will even rate hikes 0.5% in March, and so on and so forth. Then the people will think, oh, the Fed is doing too much, it will continue, and the market will absolutely go further down. Those are the two opportunities. Now, the question will be if we are seeing a fundamental change into the stock market. And I believe yes. The all-time highs, the crazy buying of everything, the insane valuations, the buying the dips works every time. All of that is basically over. Okay? Bull market or crazy bull market is over. However, though, there is the really important information what the big tech stocks are doing next. And this will be also decided by the earnings, which is also next week. We have Apple, we have Tesla, we have Microsoft. All of those will tell us how they see the future. And if there will be a slowing in growth, then there could be a very interesting movement into the markets because let's have a look into those chart analytics, okay? So let's start with Apple. Apple is one of the most strongest stock on the market, right? But then you can see here, we broke through the 50 moving average, which was at 168. And now if we fall below 160 or below 157, which is like $5 away, then we are falling under the 200 moving average, which is very bearish, okay? This is like a change of trend. Then it's a good opportunity to short the market where you can make more money than going, against the trend. So let's have a look what, for example, I think NASDAQ is already out under the 200 moving average. Yeah. Then we have the S&P 500. Let's have a look into the S&P 500. And we just need to change that to the 3 months chart. We just fall below the 200 moving average in the S&P 500, okay, which was at 4,429, and we are at 4,397. So, guys, it's a very strong sign, technical-wise, that we need to, bounce back off. Amazon, let's have a look into Amazon. 3 months chart. Also here, look at that, where we fall through. We fall tremendous below all the averages, all right? And where the stock was falling next. This is crazy, guys. Who's next? Let's have a look into Google. Also here, we just broke through the 200 moving average. So everything is very bad. So the Fed is the one that should help us here, okay? The only big stock of this of the current market is Tesla, that is not yet into bear territory. Let's have a look. 3 months. We just broke through the 100 moving average, but the 200 moving average is at 810. So we still have a little bit of room here. And let's last but not least, let's have a look into Microsoft as well. And also Microsoft is just above the 200 moving average. So you can see here, those are the stocks that holding the big S&P 500, guys. So if this is breaking, then, we can see much lower levels, okay? So this is important for next week. Earnings for the big tech companies and their look forward into the future. The technicals of those stocks, the Fed meeting, and a big relief rally would be great. This would be great. Otherwise, there is some technical damage on the stock market has been made already. It's not easy, guys. It's not like the years before. We are going into the market where you can find great companies for much less money. But also, some of them that, was crazily hyped, Rivian, Lucid, all of those crazy stocks, those get hammered as well. Exactly like the altcoins, right? Or meme coins or whatsoever. So with that said, I think you have now everything prepared for next week. So leave me a like and subscribe to this channel. Thank you very much for watching and take care.